And welcome. It's Mary Ellen McGonagle here with your weekly MEM Edge show. And this is the show where we bring you where the action is in the broader markets, and certainly a bit of a roller coaster ride last week. This past week, let's take a look at what we are going to be covering today. And as usual, we will take a look at the markets. Where did we close given all of the volatility? And then from there, we will dig down deeper, take a look at those sectors and industry groups and really see how the markets are shaping up and shaking out. Again, given all of the activity last week, trends that are taking place in earnings, that is still something that is taking place. We did touch on that quite a bit last week, but there are newer nuances coming into play this week. So we will get into that. Earnings, of course, having been a big driver of price action, certainly last week. And then volatility at extremes. And we are seeing these huge intraday swings, not just in the indexes, but in individual stocks, just unparalleled. I've been following the markets for many, many years, and I don't have a precedence, but we'll take a look at that. Also, longer term plays that are shaping up during this high inflationary period, as well as interest rates on the rise. So let's go ahead, take a look at the S&P 500. We're looking at a daily price chart of the S&P. Those of you that follow my work will know it's all about these moving averages, whether they are acting as support or upside resistance, and then of course your outside momentum indicators. So we did have a nice early week rally going into Wednesday. The markets were looking fairly good, very firm. We had two successive days of bullish, actually three of bullish activity, where the indexes closed in the upper portion of their range for the day. But of course, all of that shifted with Facebook's earnings and Thursday's drop. So here we are. This blue line is the 200-day simple moving average. So good news, we are finding support there at the close this week. Earlier, we did have that break above the 21-day, which was really quite constructive. And so we're a little bit in a no man's land, if you will, because let's take a look at these outside momentum indicators. The RSI closed the week below 50 in negative territory, but we do have the faster moving momentum indicators, stochastics, up above 50. So indecisive into the close. Not I'm sure what you would like to hear, but you need to have really firm rules during this highly volatile period. And at this point, we are not positive. So I will leave it at that. And let's go ahead. Actually, I do want to take a look at the NASDAQ, and of course, a very relevant index and one that saw a lot in the way of price action this week. And we can see that this index did and currently is closing the week above this 10-day, this green 10-day simple moving average. Not anything to really pull out the confetti for, but it is certainly better than last week when we were just really trending nowhere but down. So we can see outside momentum indicators, RSI trending upward, but it is still negative territory. Stochastics just in that positive territory. And as mentioned, these are faster moving, but they can give you a heads up as it relates to momentum and potential trends. So again, another index that is not looking particularly good, but as we move forward, I will share with you some trends and areas that are looking good, that are shaping up. And so from here, we're taking a look here at a 2-month daily price chart of the 11 sectors as well as the S&P 500. I like to add this RSI, that's a relative strength indicator, and then sort these sectors in descending order. We want to see on this upper left quartile, where is that relative strength, that relative outperformance? And as I've been citing over the last month, each and every week, energy up here again in the forefront, another 4.9% advance, continues to be at the leadership as we progress and take a look at some of these other areas. There's a very stark difference. So energy remains constructive. And then up here, we can see financials. Now, this is constructive when we have an index that really fell below this 200-day moving average, very significant drop, heavy volume, and we're watching it wedge higher. However, after today, and I'll get into precisely why, we are seeing that XLF, the financial sector, is now above each of these shorter term simple moving averages. We are posting higher lows as this area continues to potentially advance higher. RSI up here in positive territory, nice black line up through the red on that MACD, indicating that this downtrend momentum has in fact shifted. So always excited when areas that have gotten beaten down are beginning to firm up. We will get more into that. And consumer staples, they did underperform this week, but I will tell you they're up here in the forefront because prior they had been faring well, and we will get into some of the areas there as well. That's going to be all about fighting inflation and then also higher interest rates. And then healthcare, we can take a look here. It is still in the throes of attempting to reverse this downtrend. However, it was up just a little bit below the S&P 500. We are closing the week below this 50-day simple moving average, but we do have this nice MACD shift, the momentum shifting upward. If we can marry that with a positive RSI and then a break above that 50, we should be in very good standing here. A number of these larger healthcare companies are coming out with really good earnings, a lot of it having to do with peak sales in COVID testing and so forth. But the group overall, you're not seeing big dynamic responses to those nice earnings. And then as we move further, of course, we want to pay attention to those areas that are deteriorating, are not performing well, so that making sure you're not overweighted. This is XLRE. We did begin the week with an upswing here, however, found resistance at this downward trending 21-day simple moving average. Your outside momentum indicators negative. And then another area that we should take a look at, because this is basic materials XLB, and there was a sense that we would see nice vibrancy here because a lot of steel, a lot of these commodity stocks, given the economic backdrop, they should fare well, but we did see a deterioration into the end of the week, and I'll share with you where and why, but XLB not performing so well into the second half of the week. Let's go on, take a look at some of these underlying sub-industry groupings. Again, 2-month daily price chart view, that RSI, and no big surprise here. Up at the forefront on that relative outperformance is Brent crude oil pricing, closing the week at 91, and that's a big number for these energy producers. Anything above really that $50 price per barrel will put those energy companies at par, if you will, and then beyond and above that, oil pricing will really add to their bottom line. So hence we're seeing those energy stocks faring quite well. Now, this is a development that really firmed up into today's close. This is the yield on that 10-year treasury, ticker symbol $TNX, and it was up over 5.5%. We're up here at 1.9 on the yield for the 10-year. A lot of that has to do with today's super strong January employment report. So with that, we saw a flight away from bonds back into the stock market, hence the uptick here in the yield. I'm pulling up this longer term view to share with you that we are now back at levels not seen since 2020. So pretty significant uptick. As we progress here, I'll share with you ways that you can capitalize on that, because certainly we're going into a phase where the Fed, again, given today's report, is anticipated to get pretty aggressive in raising rates. So from here, let's go ahead and move forward, because again, as always, we want to be aware of areas that are potentially moving. This is I do show this every week, but this is the software IGV ETF, and we can see an awful lot of volatility bouncing around here. But I will share with you some areas and names that are in the beginning stages of firming up. We have an awful lot of work here before this group turns positive, but always like to see that MACD black line up through the red. Ideally, at some point when we can get that RSI up here above 50. Historically, when we see the RSI, that relative strength indicator, get down below 30 into an oversold, when it does eventually turn bullish, you can see some really nice upside moves. And then as we move on again with this list here of the sub-industry groupings, I'd be remiss to not share with you semiconductors. Now, we can see that it really had a nice 3-day rally. Actually, these are those 3 days. So into Wednesday, the group was up 9%, but it did give, as did most of the markets on Thursday, it got hit quite hard, and it's up still quite a bit. It's up 4.8%, but it did give back quite a bit. As we progress, I'll share with you where the strength is there in those semis. But overall, you do want to be aware that the industry group, we're not quite out of the woods yet. So tread lightly would be my message there. And then here we are with the US dollar. This is UPP, it's the Invesco US dollar index. And take a look, we did have a spike into the close last week, but the dollar this week tumbling, and that hence was that drop in those commodity-based basic material types of stocks. And then as we move forward, we can take a look at the volatility. Just thought we'd take a minute here because we can see we had this nice recession, this pullback here in volatility, certainly as we headed into the beginning of this week. So that was really quite constructive. And then surprisingly, it's not spiking as much as one would anticipate given the swing that we saw yesterday. So we are currently closing the week here at that 23 level, still well above. The average actually is 12. Anything above 18 is concerning. This is also known as the fear index, but certainly we are well below that 39 peak that we hit at the end of January. So from here, I am going to go ahead and take a very brief break. And from here, we have lots more I'm going to share with you. So stick around. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. First up, I am going to walk us down the earnings report lane, if you will. And we're going to take a look at some of these companies, the bigger, better known, more impactful names that reported last week, and really get our arms around the really big impact that's taking place and precisely why. So here we are with Facebook, Meta Platforms, FB, and we can see it had been weak going into the release of their earnings, and we can see this significant drop yesterday, well over 20%. And for those of you that maybe don't really zoom in that much, but into the market action, I will tell you that Facebook did come out with earnings that were lower than anticipated. They also guided their revenues lower going into Q1, not at all what investors want. We want companies that are reporting earnings ahead of estimates and then guiding higher. So this, of course, is absolutely broken, but I did want to share that one with you because that was the reason that we saw that significant drop on Thursday. It really shook the markets up. Another big company, Snapchat or SNAP, we can just take a quick peek while we're here, also had a significant drop in tandem on Thursday because they both Facebook and Snap rely on advertising sales on their social media platform as a way to improve revenues. So this was a sympathy drop on Thursday, but take a look. Snapchat up 60% today. Big number as far as their earnings and sales, and big volume on this potential downtrend reversal. So very much worth being aware of. And then another heavyweight name that came out with numbers after the close yesterday. This is Amazon, up 13.5%. The company reported fourth quarter operating income that was well above estimates. And then the company also had earnings that crushed estimates, and they guided higher going into the first quarter of this year. So lots of positive news. However, not a great looking chart. This was another stock that fell very significantly yesterday. So we are up 13% on the day, but still below these downward trending simple moving averages. Pin is another social media company similar to Snap that relies on advertising, and they actually came out with, actually that is not the right ticker symbol. I'm going to add a little S there. I thought that looked a little funny, but this is Pinterest, and really it's up 11%, but it also dropped on Thursday, so net not a whole lot there. So here's an area and a couple of names that I'm really excited to share with you, because good old software. This is Bill.com, Bill. They provide back office cloud-based software support for smaller companies. And many of you may be reading about just how many small companies are being started during and post-pandemic. Big market to address. This stock was a big winner. We had it on our MEM Edge report during its uptrending period, but really fell out of bed. The company did come out with earnings that were well above estimates, and they guided higher. That's that combination. The stock's up 36% on the day, and we do now have that break above that 50-day simple moving average. You're not going to see a lot of stocks in software that have that dynamic. So really going to take a look, because if the stock proceeds to trade higher at some point in time, this is not as pronounced, but you will be on the lookout for a continuation rally that would eventually pull those shorter term moving averages up, so that then the stock could trend higher. Of course, wishful thinking here, but keeping an eye certainly closely on that one. Let's take a look at a couple of other, at least one other software stock that reported, and I'm sharing with you high growth, widely followed software stocks. These are companies that had these. Take a look. This is Fortinet, FTNT, and we can see this nice, beautiful uptrending period, all about growth. Peaked in price here, actually be after most software stocks did, and on this daily chart didn't really get as beaten down. So this is on has been on my watch list. Because when we are in a period of deterioration, you want to key in on those stocks that are showing a relative outperformance, because once those group and broader market pressures lift, those stocks go on to be your leadership names. So here we are, FTNT, the company did come out. They presented 16% in the way of year-over-year earnings, 7% above estimates. So earnings above estimates. The company also guided higher going into next year. So very much a similar phenomenon with Bill, BILL, but I will argue that FTNT has a lot less work to do to turn bullish. We have that nice black line up through the red. RSI is positive, so kind of interesting, and software stock that's looking good. And so from here, let's go ahead and take a look at a couple of others. Of course, a lot of you may have read about PayPal. So they did come out with earnings. Take a look at this significant drop. They already were down and out, and all about guiding lower and just losing, as far as subscribership management, guided lower in their estimates for new clients going into next year. But what I wanted to do from here is share with you 3 stocks that are in that payment processing area that have reported recently. And boy, a whole different looking chart. This is MasterCard, and the company did come out with earnings at the end of January. So right in here, and we can see, take a look at this significant move upward. The company came in with numbers 43% year over year. They also guided higher. Another stock we can look at that also reported at the end of January is Visa. V is the ticker symbol, breaking up above this 200-day. Take a look, these shorter term moving averages now trending upward. Also came out with very strong numbers. And then one last name that reported at the end of January, but is continuing to increase, actually breaking out of a base. This is American Express. And here's what it's all about. There is a fact that travel is really on the uptick. Management from each of these companies talked about record Q4 in the way of traveling. And also American Express had a comment that I thought really summed it up, that consumers are going everywhere except the office. And the reality there, I can tell you from my experience, I have an assistant who is in her 20s, and she is working. She's been in Guatemala for 10 days, Costa Rica, Colombia, just traveling, but really doing her job, but on the move. And I think that's indicative of certainly that generation. That's one area driving travel. And a lot of these payment processing companies we just talked about, their profit margins really improve, particularly as card holders use their cards overseas. So a lot of dynamics there. So I, from here, wanted to take some time and talk about companies that are due to report next week. These are going to be really high impactful type, or certainly well-known names, so that you can keep your eye on these earnings, because they have, as you can see, been quite impactful as it relates to their response. And then eventually, ideally, you'd like to see that move the entire group higher. So here we are with Chipotle, and boy, this is just a beaten down stock. Another big winner. I've had this on our list in the past, but they've fallen out of favor, a lot in the way of supply chain, wage pressure issues, and so forth. So it will be interesting to see if they've been able to, I know they've raised their pricing, whether that will then translate into a nice quarter. They're due to report on Tuesday. That said, I did want to point out, even despite this deterioration, the stock is still trading at 62 times their multiple. And that really is important in this certainly high inflationary period. There is an attractiveness to lower multiple stocks. Let's take a look at McDonald's. They reported their earnings last week. And with these companies, you're going to want to pay attention to same store sales. McDonald's did report strong numbers. They've been able to increase their pricing and come through. Two other things here. McDonald's has a 2.1% yield, and it's trading at 28 times. So different dynamics, but would love to see some of these retailers come back to life. Another company that is due to report next week is a pretty well-known semiconductor stock. So this is another area that has gotten driven down. MPWR certainly more than the industry group. They are due to report on Thursday, but let's take a look at two other companies in that semiconductor space, better known, that did report this week. And this is actually a good looking chart. I talked about this when I did the pitch about a week and a half ago, but really what I wanted to share with you here was Advanced Micro, AMD, a well-known chip manufacturer in the gaming, crypto space, and elsewhere. And here's that gap up on earnings. It's treading water here, but certainly very different looking than some of the other semis. Here's another name that reported. Qualcomm came out with numbers midweek, gapped up on the report, traded to a new high on Thursday despite a very difficult market elsewhere, and also treading water, but it is above each of its key moving averages. So we're going to keep a really close eye on that one. One last name to be aware of. They reported last week, and just telling you and reiterating how significant it can be when management guides lower. This is Teradyne Semiconductor. TER dropped over 20% because they came out with strong numbers, but management did guide lower. And then another area, let's take a look at a couple of software stocks that are due to report next week. And again, all about paying close attention. Are they able to at least have a little bit of liftoff here? Are they creating bottoms? So this is Paycom, PAYC, due to report on Tuesday. Take-Two is going to report on Monday. This is, of course, a gaming, not one of my favorites. This has been really a very sloppy chart, not a name that I would be interested in. But ideally, if we do see good numbers, it is a software stock up 7% today. They pre-announced that their next version of Grand Theft Auto is close to completion, so that got investors interested. Another company that is due to report, I'm taking us around the world, so to speak, as it relates to different sectors because we want to be on top of potential movement. This is Molina, MOH. They are a health insurance provider. And we can see the stock is really firming up here going into earnings. They've broken above all their shorter term moving averages. We have nice upside movement here on that MACD. RSI is positive. They're due to report on Wednesday. And then I always like to share precedent. This is United Healthcare, UNH. They reported at the end of January. They showed 78% year-over-year growth, but kind of constructive looking here. And again, always about trying to explore the possibility of breadth, and are we seeing more areas and more stocks participate? So that is all about this review here on earnings. Pepsi is due to report on Thursday. We can just take a quick look here at their last earnings release, and that's right here, October 5th. We can see it reversed this downtrend and had a very significant rally, all about their ability to raise pricing because of brand loyalty. Now, the multiple is much higher, so it will be interesting. Here's KO, also due to report on Thursday, and then their last earnings release was here, but again, price increasing has helped them. We can take a look at Procter & Gamble. They also reported in here, had good numbers, but we're not seeing a lot in the way of traction. Actually, one last name that I want to share that is due to report next week. This is similar to FTNT. It's at the top of my watch list. It's called Datadog, DDOG, and they are due to report on Thursday. A nice strong grower. And what I'm looking for here are companies that have reported, gapped up, trended higher, gapped up, and then of course the group fell out of favor. So keeping a close eye on this one as it really is in the throes of seemingly reversing. So a break above that 50 would be ideal. So I want to move on and share with you another area, and hopefully we have time. If not, yeah, we're pretty good. Otherwise, I can expand upon this next week. But this is all about areas that are faring well. They're coming out with good numbers, and they have reasons to continue to do well going into the next couple of quarters and beyond. This is Chubb Group, CB. They are the largest property and casualty insurance insurer. And the company gapped up here on earnings that were well above estimates, 15% above estimates. So a couple of dynamics at play here. Insurance companies do fare well during periods of rising interest rates. A lot of that has to do with the revenue or the income from fees as far as insurance, and they invest them in bonds. So those higher yields really help the company's bottom line. They are relatively defensive as well. People need insurance regardless of what may be taking place elsewhere. So a very long-term Good looking chart there. One other name before I have to move is AIG, another insurer, 2.1% yielder. Last up, we will take a look. Next week, I'll share additional names here. This is Principal Financial, 3.4% yielder. They are due to report next week. So we'll take a look at whether that really helps the company reverse. And I'm going to leave it at that. For those of you that have not already, take a look at my MEM Edge twice weekly report plus alerts, and see you next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.